journey of ensuring that we involve with active stakeholders in the power sector in Uganda. And this started way back in 1997, where we were engaged with key stakeholders. I'm happy to announce that as part of our panelists, we are going to have a number of stakeholders from Uganda Generation Company Limited, Uganda Transmission Company Limited, and Uganda Distribution Company, and maybe as well. I want to very much be part of the value chain, the value budget yesterday, and the government is considering embarking on the next phase of distributing power to the last users. I'm delighted that we are part of this process, and this discussion is really going to steer our minds around the COVID season and the fact that we shall be partnering with a number of stakeholders to deliver this value chain. I'm delighted to say that we have an experienced moderator by the name of Absa Uganda. He's a student power systems expert, spanning over 27 years in the power subsector industry. He serves in a number of capacities in Mele, in Northland International of Norway and Oslo. He was the director of technical regulation in ERA. Currently, the lead consultant of NF Engineering Associates. Please welcome the administration by professional. Thank you very much for that. I want to hand over to you at the point. Thank you very much.
Excuse my background. So
hello. Hello, do you hear me?
Yeah, but
yes, we do.
You can some people.
Sorry?
Yeah, there's some noise around for some people. So we're missing some.
Okay, can I just thank you, Michael, for that kind presentation.
Engineer, if you can unmute, please.
Better?
That's better, thank you.
Oh, is that better? Okay, sorry about that. Yes, thank you, Michael, for that kind introduction. I was saying that just for clarity and for the benefit of the participants, some of whom have already called me earlier, congratulating me on this new title of Dr. Norbert Semitala, I would like to make clarity that I think is on account of the goodwill of Absa's preparation team, who I think wished me very well so that I become doctor maybe. But I want to clarify that I am not Dr. Semitala, I'm Engineer Semitala, and there is no work in progress in that particular regard. Thank you very much. I want now to introduce the panelists. I have 4 panelists this morning, starting with Mr. Robert Kasande. Mr. Robert Kasande is the PS of the Ministry of Energy and Mineral Resources that is responsible for the development of power, minerals, and oil and gas. He has been in the ministry for the last 32 years, started out as a field geologist and rose through the ranks to Director Petroleum before he recently became the PS. He has previously been responsible for exploration of oil, where he has received a presidential award for the discovery of oil. He later moved to Midstream Petroleum, responsible for pipelines and refinery development. Colleagues and out there, I should also add that Robert, like myself, is part of the alumni of the prestigious Norwegian University of Science and Technology in Trondheim, Norway. You're most welcome, Robert Kasande, Mr. Robert Kasande. Are you there?
Can you hear me?
Yes, now we can hear. Did you hear me as well?
Yes, I did. Thank you for the introduction.
Thank you. Thank you. Next panelist is Mr. Paul Mwesigwa. Can you hear me, Mr. Paul Mwesigwa?
Can you start the video?
Hello, Paul, are you there? Can you hear me, Paul Mwesigwa? I
can hear you.
Very good. Mr. Paul Mwesigwa is one of our other panelists. Has over 20 years of experience, of which 18 have been servicing the electricity distribution subsector in different management capacities as a financial controller, chief internal audit and risk management, and chief finance officer until July 2019, when he was appointed the managing director of the Uganda Electricity Distribution Company that you know very well, UEDCL. By way of qualifications, he holds a first degree in economics from Makerere University. He is a fellow of the Chartered Certified Accountant, or briefly called FCCA, of the United Kingdom, a member of the Institute of the Certified Public Accountants of Uganda, ICPAU, and he holds a Master's Business Administration from the Oxford Brookes University of the United Kingdom. Colleagues, I am sure you will agree with me that this is a very highly qualified gentleman. You're most welcome, Mr. Paul Mwesigwa.
Thank you very much.
Next is our very own Mr. Celestino Babungi, the man that is close and dear to our hearts, because he's the managing director of CEO. Celestino, are you online?
Yes, engineer, I'm very online. Here I am.
I am exceedingly humbled and honored to introduce you, Celestino. Yes, Celestino is the managing director and CEO of Umeme, the main electricity distribution company in Uganda. As you all know, Umeme is a public company listed on the Uganda Securities Exchange and cross-listed on the Nairobi Securities Exchange. The company serves close to over 1.5 million customers currently, with 1,625 direct staff and with a turnover of 1.8 trillion for the year 2019. So that is certainly something to take note of. Celestino previously served in different management roles, including being the Umeme CFO. He also previously worked at Ernst & Young. He is a professional accountant. Like Paul, is also a member of the ICPAU and is also a fellow of SCCA. Colleagues, I'm sure you will agree with me when I say that in my next, when I grow up, I would like to be like him. Thank you for joining us.
Thank you.
And last but not least, in the panel is another distinguished gentleman, Mr. Martin Roy Lukwago, who is a financial mathematician. I don't know what that means. And banker with a wealth of experience in corporate investment banking, risk management, and investments, global markets and treasury. He has previously worked with Stanbic Bank, Uganda Development Bank, from Uganda, and Total Uganda. At Absa Bank, he is now the Vice President, the head of public sector, financial institutions, and non-bank financial institutions. And just to complete the story, I also need to tell you that Martin Roy is one of our, because he's a civil engineer. And in my view, this is what I call agility. You are welcome, Martin Roy. Mr. Martin Roy.
Thank you, Norbert. Thank you very much.
Colleagues, thank you very much for joining us in this webinar. And we thank Absa for having thought it wise to put together this kind of webinar, because it's discussing something that is critical and very close to our hearts, and that is the power subsector. I thought I should make some small clarifications, because when we were discussing with the Absa at the beginning of these preparations, I also noted that there is a bit of confusion between energy and power. But for the sake of this particular webinar, just be informed, colleagues, that power sector in this particular regard refers to the value chain of electricity supply from generation through transmission to distribution. While energy, on the other hand, may include things like oil and gas and so on. But this particular webinar is talking about the electricity supply value chain. And to help us discuss the issue, the topic for discussion is the impact of COVID-19 in Uganda. And we are going to start with the PS himself. And we're going to ask him to give us, first of all, his give us a flavor of what your mandate is from this particular perspective of the power sector. And in a similar vein, you will also give us your 2 cents on the impact of this COVID-19 from where you are seated in the electricity value supply chain. And of course, it could be that there may be certain opportunities have emerged in this particular. It's possible that there could be opportunities, but also highlight them if talk, but maybe challenges, and how to address these challenges going forward. You're most welcome, Mr. Robert Kasandi.
Thank you, Engineer Semitala. I hope I can be heard.
Yes, you are.
I don't see the video though, but I hope the people I'm speaking to can see me.
Yes.
Okay. Thank you very much, Absa, for putting this together and allowing us to have this discussion going. Like any other sectors, the Ministry of Energy, the energy sector, has been impacted by this pandemic, which has not only impacted this country, but globally. Nonetheless, the ministry has carried on its mandate, even in this time of lockdowns. And what is that mandate? The ministry's mandate is to establish, promote the development, strategically manage and safeguard the rational and sustainable exploitation and utilization of energy and mineral resources for social and economic development. Like the moderator has already said, we'll restrict ourselves in this discussion to energy resources, which is power in this case. I don't know if I'm audible enough. I see Martin seems not to be hearing me. Is everybody hearing me?
I can hear
I
you
can
very
hear
well
you.
at least.
Loud and clear.
Very good. Your body language seems that maybe you are not hearing me, Martin. That's fine. Let's proceed. Yes, we'll restrict our discussion to electricity, also commonly known as power. A number of impacts have been registered in this area. The value chain of power involves generation through transmission and distribution. And I will go through those segments of each of those value chains and see how each of them has been impacted. There is slight difference in how each of those has been impacted. As far as generation is concerned, currently we are generating 1,254.2 megawatts, but we are only utilizing about 720 megawatts. We have realized, of course, even declining utilization. I think now it's probably below the 720 megawatts as a result of the lockdown, but I'll be going through what has occasioned that and what we are doing about it. We are also, of course, continuing to construct a number of power plants, notably Karuma, which is 600 megawatts. The planned commissioning was meant for November this year. That would see us eclipse 2,000 megawatts at the end of this year. However, the global lockdowns and the local lockdown has affected progress, and we hope that we can still meet that planned commissioning of November this year. The impacts have come as a result of the fact that most of the equipment that we are using on the power plant is imported from overseas. What does this mean? You cannot now do factory acceptance tests that are required before this equipment is shipped here. We all know that this power plant is being developed by a Chinese company, and coincidentally, the lockdowns happened when there was the Chinese holiday, the New Year in China, and many of the workforce had gone for this holiday. So some of them could not return on time. That has impacted us. We can't get in necessary consultants to the plant. We have seen some generation plants evoking force majeure, clauses in our agreements. Obviously, this is bound to impact on the timelines. But we are doing everything that we can to ensure that at least work continues, with the people who are supposed to be working on these power plants restricted to camps to ensure that we manage the impact of COVID-19. We have also had to get special permits for these crews that are moving between Kampala and Karuma and the other power plants that are being developed, particularly the small hydros in the southwest Uganda and eastern Uganda. The other segment of the value chain is the transmission. We need to get this power that we are generating to the main demand centers, the markets. And to do this, we looked at, if you will, to run and develop transmission lines that will take power to the main demand centers. The country set out to develop industrial parks and also infrastructure that will enhance regional power trade. Because clearly, if we are generating for now 1,254 megawatts and we can only consume 720, we need this power to get to the markets. This helps, the more power we sell, helps also to tariff. Yet again, the COVID lockdowns have not made it easy for us to be able to have necessary personnel, the necessary equipment to these areas that we're already developing to get power to the industrial parks. Really the same impacts as upstream generation, where we need to do factor acceptance tests before the equipment comes here, where the consultants need to come in from overseas that we work with, and particularly the transmission has had a larger impact as far as this is concerned, because the footprint for transmission is long. We are developing a line that is going through trading centers. You must ensure that your people are protected from COVID-19. This has seriously impacted on our progress, especially the key transmission lines like the Karuma-Kawanda that will bring power from the Karuma power plant and northwards to Oluyo. Like I said,
Yes, we have 5 minutes so that we can be able to have a Q&A question at the end.
Very
so
well. I'll make
yeah.
sure I'll in with those 5 minutes. The last segment, which is I would call the downstream segment of the value chain, is the distribution part of the value chain. Here we have seen reduced consumption of our power. Obviously, the power plants, rather the industries are not working at full capacity, and we see that they are our main consumers of the power that we distribute. That has impacted on revenues coming in to the distribution companies, like the ones we have here on the panel, UEDCL and Umeme. There is the old adage that says, your chain is as strong as the weakest link. When the revenues are not coming into the distribution pockets, we have the whole chain weak, because the distributors are supposed to get revenues and pay the transmission. In this case, UETCL. UETCL equally pays the generation plants. So we have had a challenge there, and that we have been working as a ministry, as a sector, to see how we intervene and address that challenge, where the power that is distributed is paid for. We have started as a government to ensure that all health facilities in the country, especially those that are going to be quarantining people, that are going to be first responders to health, that they are not switched off. So therefore, through the Ministry of Finance, we are putting together a financing facility, working with the World Bank, that will see us at least avail about 450 billion shillings to ensure that these facilities are on all the time and they can meet their bills. Other businesses that need to be able to pay their bills and of course consume our power are the industries, particularly the SMEs. These have been catered through the package that was announced by His Excellency the President during the State of the Nation address, in terms of tax incentives, financing through the UDB that is going to receive about 1 trillion shillings to avail affordable financing to these small and medium enterprises. So we think that with those interventions, we can see that the factories are able to meet their power demands and pay for them, and therefore the distribution companies can also meet their obligations to transmission and equally transmission to the generators. But I call upon, now that we have Martin here from the banking institution, I call upon all the banks to join hands with government to structure financing packages that are user-friendly. I think the interventions that the government is making through UDB will need support from other banking institutions. So without preempting what Martin is going to say, this is something that we would want to see banking institutions playing a big role. I think with that,
Thank you very much. You have been extremely precise, because you have used exactly 11 minutes out of 10 that was allocated to you. That is very nice. Thank you very much. But you have made several points that I think that participants may want to follow up on later on in the Q&A session at the end of the presentations from the panelists. For the rest of the panelists, I think 10 minutes has been allocated to you to be able to present what you want to present, so that we also can hear from our colleagues who should be able to send messages through the arrangements on this platform. The next presenter is Mr. Paul Mwesigwa. As a matter of clarity, I need to I just remember during the presentation that I always get some some bit of confusion from people out there, and they always say, what is it that makes UEDCL different from Umeme? UEDCL. Hello, am I clear? Martin, am I there?
Yes, you are.
You're very clear.
Okay. Yeah, so I was saying that I just need to make that small clarification that UEDCL is Uganda Electricity Distribution Company Limited, is an asset owner and therefore holds the asset holding license for the distribution assets that Umeme is operating. So in very simple terms, UEDCL is the landlord and Umeme is the tenant. I thought I should make that clarity. But over and above that particular role of asset holding that UEDCL has on the main assets that Umeme, they also have a distribution license, because they also operate from they operate some other grids that are outside the Umeme footprint. So I thought that I should make that clarity as we welcome Mr. Mwesigwa also to give us his his presentation overview of the mandate that UEDCL has, but over and above that also give us the impact that you have from COVID-19, and if there are any issues that you want to share with us with respect to the measures that you have in mind in dealing with COVID-19, you also we want to hear that and see how we go from there. Thank you very much, Mr. Paul Mwesigwa. You're welcome.
Thank you very much. I believe you hear me. And unfortunately, you can't see my phone video, but
Paul, I can't hear you very well. Hello, maybe you have to come closer to the microphone, Paul, right?
Hello, thank you very much. Can you hear me now?
Yeah, but you just stay in one position. Sometimes when you move a little bit, it tends to give that kind of feedback effect. Just stay in one place,
okay.
Close to the mic. Yeah.
Okay, maybe it could be network stability.
Maybe
okay,
the network also.
Moderator, yeah. I could start giving the mandate of UEDCL. As you mentioned, UEDCL is owned by the government, and for purposes of attracting foreign direct investment from the private sector, in line with it was decided that part of the distribution network would be concession. So that's why Umeme was brought on board, and part of the distribution network especially in the vaccine was consistent for a period of years. However, our mandate continued to own and oversee what moves the network, such that the government and the Uganda benefit from private investment needs. So we oversee the investment and the value addition. At the same time, we do this in the rural areas. We operate in 61 districts across the country. Those are the areas where we don't supply because these areas were not. However, we try to take them to break even point. On addition to that, we operate power plant to achieve on the product of the plant. So what COVID-19 done to us? You realize, as the PS has mentioned, that hello, can you hear me?
Yes, a little bit faint,
Yeah,
but we can hear you.
Yeah, you realize
That's better.
Okay. Yeah, that in this period of COVID, there has been a reduction in the business. It is true. However, the most critical time for distribution is high because has to be afforded. And our effort as the national was to make sure that we even support the private concession, such that at the same time we share our distribution in the areas where we go. And the only challenge that revenues have gone down, the expenses will have a reduction of 2%. At the same time, collection has also been affected because you realize that there are some institutions, especially in this, which you had to support as wait for the like the health centers, medical facilities have money, factories to pay, to payment arrangement, people supporting them. But I believe that if we continue working on the distribution, power stability will improve further. Now, the lesson that we've learned from this period, especially when there's movements both in and out of the country, if I could start that as developing equipment and that we use, especially in our distribution, if supported with government, most of them will put innovation because we have had us. However, in that obstacles now enemies could be. Then the other thing that if this environment, what could be the opportunities to have to look around? We are very happy with and the stakeholder that lessons learned from the period have ended up now to say that we need to our import substitution. What does that mean side of the distribution of energy? It means that the consumption say that something went wrong. First,
I can't hear.
Well, Hello, are you there, Mr. Mwesigwa? I think you've been the network has been grossly interrupted. We have not had several of your presentation, but I think we will probably need some IT support on your end. I believe that there will still be an opportunity during the Q&A session. Were you through? I couldn't hear the last bit.
Yeah, I'm not. Yeah, seriously, the network, and the mini Kampala, unfortunately.
Well, okay, we could unpack. We could just pack this for now and see. We could use the platform for chat, right? During the Q&A session, we might want. I'm sure we might want to interface with you again on the Q&A session, because I think in the meantime you could ask somebody to support you internally for the IT aspects, because I believe that there is also something to do with some kind of technicalities. But thank you very much, Mr. Paul Mwesigwa, for that insight. We will get back to you during the Q&A session. Next on the presentation is Mr. Celestino Babungi, the Managing Director for Umeme. He's also going to take us through these issues from where he's seated as the MD of the biggest distributor in the country, so that he might want to unpack some surprises for the customers. I don't know whether it's within his mandate, and tell them that henceforth you are not going to pay the April and May bills. That would be one of the best Christmas gifts, Celestino, you may want to give your customers. But over to you, Celestino.
Okay, thank you. Thank you, Engineer Sala. And thank you for your kind introductions. As you are aware, as a former regulator, you know who decides on pricing issues for electricity. But again, to thank the participants, just to build on what my PS indicated, the distribution sector is very crucial for this country, and we are the tail end of the electricity supply industry. Just to re-emphasize that electricity is crucial before, during, and after COVID. You all agree with me even when the president was talking about his TVs per village. What sprang again in my mind was, how do we power those TVs? Health facilities, as indicated by my colleague, the PS, require power. All education, agriculture, tourism, entertainment, all these things require power. And as we remember, as a private sector, ours is just to ensure that that power is willed to the consumers, and consumers pay for that power that they use. So we do not take our mandate lightly, given that we are really at the crucial point of electrification of this country. I think, just to the point, we are not living in an island as Umeme. It's true, when the ED UBOS on Friday was releasing the GDP numbers, and yesterday in the minister's speech to Parliament, Minister of Finance, it was clear that our growth projections have been reduced as the economy from 6.8. Now we are going round to round. The year has closed at 3.1%. And he indicated that the most significantly affected sectors are industry, where growth dropped from 10% to 2.3%, and services industry from 5.7% to 3.6%. It's evident that the significant service industries that have been affected include tourism, accommodation, entertainment, recreation, and others related to that. And you will see that really, because of these reductions in growth from the economic perspective, we also are not an island. We've seen and we project, you will see that GDP was growing previously, 6.8, 6.2, and it is in tandem with the volume of electricity sales that we provide in this country. And these numbers are available in our annual reports. You will see that in 2015-16, we're at par, and 16-17, we grew at 6.2, GDP 3.8, 17-18, 8.4, 6.2, 8.3, 6.8. This year, you've seen they have revised the GDP numbers to 3.1. And again, electricity demand, as indicated by the PS, has dropped. We project that this year, ended June, electricity growth will be at 1.2%. And as I indicated, we are not an island. If industrial demand has gone down, hotel industry is down, accommodation is down, entertainment is down, even domestic customers' incomes are down, we have seen the demand for electricity actually go down. But what's important is you look at where is the power going. That chart from our 2019 report shows that really with 67.7% of power going to industrial customers, anything that hits them affects us. So what have we seen? Demand is down. We project growth of 1.7% by end of this year. Payments, we saw in April and May when there was a lockdown, our average bill payments dropped to year-to-date around an average of 93%. And really it's real because most of the industries are closed, people could not access their offices. And the bankers will tell you also they may have seen on their side a reduction in the liquidity or payments or cash flow movement activities. So that's a known. The second known is service provision was also impacted. Because of the SOPs, we were also directed to adjust in terms of how many people can sit in a vehicle, social distancing at work, how many people can come to offices. So really, our service provision to customers was impacted. But the good news is we have significantly invested in technology for prepayment, for payments, for control of the network, for contact to us. Even if we close our offices, you can reach us through the call center, through WhatsApp and everything. Those tools enabled us to continue providing the service while there was a total lockdown. Even we zoned our technical teams to focus on specific areas, and work instructions would come through use of technology. Safety is the other point that I want to emphasize. At Umeme, our number one value is safety. We believe we deliver a dangerous product. Our staff must be safe. Our contractors must be safe. And we always we advise our customers to use electricity sensibly. What has happened now, the sphere of safety has been expanded to include SOPs related to COVID-19. And that's also challenging in that it also slows down how we do our work while preserving the safety of our staff and the public. The third element I would like to say is supply chains, as indicated by Paul, were impacted. We get components of our inputs from China, India, Germany, and other countries. But because of COVID, those countries locked themselves. And you may have recall even transportation was curtailed. Now even flights are not there. You will see from Mombasa to Kampala, it's now taking you 2 to 3 weeks. So really we have been impacted in that sometimes you run out of some components which are crucial for your service delivery, and our projects also have somewhat been slowed down. So what we see as from our side, given those impacts on supply chain, finance, the way we work, our customer demand, and given the importance of this sector, for me, I think it's very important as a sector and as a country, and we appeal to our customers and the financiers to protect this sector and grow it, because it's the foundation of industrialization, SMEs and life, ICT, health, education. Therefore, we cannot cowardize and cut back because of COVID. All we have to do is come out with COVID and still fight to grow the sector, knowing that access to electricity in Uganda is still at 25% on the grid. So we must remain strong as a sector. Our customer payments are very important, that when you pay for that service, as indicated by the PS Energy, it enables us to pay the transmitter, it enables us to pay the generators, and it enables us to continue to serve you. If this sector becomes unsustainable, then the service goes down, then we go back to the old days where the system was not reliable and very people were using electricity. It's a known, as indicated by the PS, that our maximum installed capacity is 1,254. We are aware, as I've seen from the press, Karuma is at what? At 98 completion. By end of year, it's coming. We must create demand for this power to improve the country. We must connect more customers to improve the country. Also, we must build capacity and continue to invest in technology. Given that COVID is here to stay, we must change the way we work. Overall, I say we must remain, first of all, as a country, attracted to FDI, but also as a sector to FDI. Energy sector attracts a lot of money, be it in oil and gas, be it in construction of dams, be it in distribution, be it in transmission, both private and public. All I'm saying is, during this period, and it's good we are talking to the bankers here, we must leverage and balance private capital and public capital to complement each other and continue to grow the sector. Otherwise, we cannot hide ourselves. All we do is continue growing this sector to serve the country Uganda, given that electricity is at the pivot of our growth agenda. With those few remarks, Madam Moderator, I stop there. Thank you.
Thank you very much for being very precise. And you've used approximately 9 minutes. That is very nice. Thank you very much, Mr. Celestino. Now I'd like to invite Mr. Martin Roy Lukwago to give us his remarks from a perspective of a banker on how this COVID has affected possibly their side of things, looking at it from their side of things.
Thank you very much. Can you hear me? Somewhere along the way, we lost your voice. So thank you very much, Norbert, and good morning to everybody. It's a good opportunity to interact with everybody on the forum. I wish to talk about this subsector power. I'll not go ahead to redefine. I'm happy that Norbert had defined it earlier, and in a bid to clear the confusion between energy and power. With reference to the subject under consideration, I wish to note that Absa Bank has been in Uganda for over 95 years and is part of the Absa Bank Group, which employs over 4,200 people or staff across Africa, and just over 900 in Uganda alone. Absa Bank is regulated by Bank of Uganda, and anyone, wherever they are, can be very safe and comfortable to work with Absa Bank Uganda. I wish to note that the power sector is very critical as a driving factor in the development of the nation. And as a bank, we are very focused on supporting the government and the nation at large in the entire value chain, all the way from generation to distribution. I also wish to mention that the bank has been very supportive to the entire value chain, especially right from the time when the subsector faced privatization in that's about 1997, if I'm not mistaken, all the way up to this current situation where we've seen several projects being done by government, including Bujagali. Now you have Isimba, you have Karuma, and so many other independent power producers coming on board. As a matter of fact, I appreciate the submission that has been presented by my fellow panelists in line with the level of production of power that the country has seen for the years past. Now, I wish to mention that the bank definitely has and continues to offer quite a number of services to the value chain players. I want to refer to the different segments within the value. I want to refer to the value chain players within the segments that were created post the privatization period, where we have the generation, we have distribution and transmission. So under distribution, of course, we've got the key players, UMEME and UDCL, where my fellow panelists are coming from. We also have transmission. We also have under generation quite a number of power producers, but majorly to speak to is Uganda Electricity Generation Company Limited, UGCL. Now, I want to refer to those in my submission as the anchor players, of course, together with rural electrification, a new initiative taken up by government to ensure that power reaches out to the rural areas as in a bid to drive development, as opposed to the previous setting that UEB had, where it expected development to kick off before power could be supplied. So those players that I've spoken to, I want to refer to them as anchor players. And then along the way in the discussion, I want to speak to the business partners, to the anchor players. All these include the suppliers of material and the suppliers, contractors, and distributors of all the products that are emanating from the anchor players. That's the way I want to classify the respective players in the value chain. So what the bank has done is to support, yes, the independent power producers, the transmission company, and the distributors in the different areas of services that they have rendered. That included, we've offered services as a bank, ranging from debt solutions, transactional services, trade and working capital, and the list goes on. But bottom line, we are consistently in discussions with all these value chain players to ensure that we enable them to achieve their goals by and large. But without necessarily taking much time to talk about the great work that the bank has done, I wish to touch the key subject under consideration. And what is this? The impacts observed in the power subsector. So definitely, COVID-19 has, as we all know, resulted into a lockdown that has definitely impacted on the, that has definitely resulted in low productivity across the entire value chain. We have seen this because we have seen this across all the stages of all the respective segments of the value chain, including generation, transmission, and distribution. Why is this so? We have clearly seen that because of the low productivity across the different sectors of the economy, we have seen reduction in the collections that the distributors, UEDCL and UMEME, have made or have cited on their side. And let's not forget, the chain is very simple. The distributors collect their revenues, they pass over the payments for the power supplied to them to Uganda Electricity Transmission Company, which as well proceeds to effect payments for the power produced by the independent power producers. So once you see a reduction in production of power, a reduction in consumption of power, subsequently that evolves into ultimate reduction in the revenues that are cited by transmission and the independent power producers. However, we shouldn't forget the fact that transmission has an obligation, regardless of whether there is COVID or not, to ensure that payments are effected to the independent power producers. So essentially, transmission ends up appearing to be a buffer zone of sorts, yeah, a shock absorber, so to speak, for lack of a better phrase, and that definitely has to have an impact on the growth of the economy. We have also seen that the business partners to the anchor stakeholders, anchor players within the value chain, have had challenges with importation of goods, and we know very well that the regular, some of the regular equipment that the business partners would need, as well as the anchor players, equipment such as transformers, the switch gears, the cables, the substation equipment, the meters. I mean, all these, we clearly know that we are a net importing country and we have to import this equipment. A lockdown of 3 months definitely has had an impact on all these value chain players. So with all this spirals into the low productivity, and I must commend all the anchor stakeholders, because in the midst of all this, coupled with government, they've ensured that there's consistency in supply of power, because I mean, so many things have been on the list of requirements, let alone the other items like security. All these require power to ensure that there's a certain minimal level of continuity of business to some extent. Then, so of course, UMEME and UEDCL have definitely seen several impacts on their side. And we shouldn't forget the fact that whereas there is consistency in the supply of power, they have not been aggressive in cutting off power for those that have delayed to pay for the bills. However, we shouldn't forget the fact that whereas this is ongoing, they're a business, or there are businesses that have to register profitability at the end of the year, and the reduction in collections has definitely impacted on their operations. However, as a financial institution, we have been at least in regular discussions with them to ensure we support them in the different areas, at least to maintain a certain threshold of business during the lockdown. Probably one of the questions that anyone would ask is, what do we think can be done? Or what have we done to enable continuity, number one, of business? Number two, to support, any form of stimulation of economic activities so that the nation can actually regain its growth pattern to the 5.1, 5.2 levels of GDP growth. On our side, as you may know, it's clear that the low productivity by the different stakeholders has definitely resulted in the several segment players or value chain players having low capacity to repay their financial obligations in respect to the loans that they could have taken. But I wish to mention that the bank is definitely all out looking out for any stakeholders, any value chain players that are having challenges in this regard. And the bank, as previously announced by the regulator, the bank is willing to offer a supporting hand through restructuring of the facilities, but with the guidelines, under the guidelines offered and presented by the regulator, the Bank of Uganda. I wish to also note that whereas all this is ongoing, I appreciate what my colleague Celestino has mentioned, that while all this is ongoing, we shouldn't forget the fact that the country expects fresh volumes of power to be produced by the likes of Karuma and the recently commissioned Isimba Dam. Now, we all know that this was not our money. We borrowed money. We have to pay back this money. What does this mean? That whereas we know that there's low economic activity, as a nation, we have to pay back this money. Now, we shouldn't forget as well that that money has to be made by the public sector, private sector, all of us together. And whereas that is ongoing and is in phase, we know that as a nation, we have to regain our economic development. But what are we looking out to do? I think the challenges are all over. We understand that government is constrained by so many other priorities, but what we want as a financial institution is to make sure that we continue our engagement with the anchor stakeholders, anchor players that we spoke about, the likes of UETCL, UGCL, and UMEME, the distributors, as well as UDCL, to ensure we provide solutions to them. We all know very well that the kind of investments that these organizations need are quite huge. Sometimes they can be overwhelming, even beyond their balance sheet capacity. So what we want to do is to offer solutions that are bespoke enough. Some of them could be off-balance sheet transactions. Some of them could be on-balance sheet transactions. Some of them could require intervention by the government by way of provision of guarantees. But bottom line, we are more than correct. We are more than ready to continue our engagements with those anchor players, as well as government, to ensure that we provide solutions that are bespoke to enable production of power or availability of power to all the expected consumers with the low tariff that government is looking out at through the regulator, and even in the midst of the inadequate balance sheets that the respective anchor players have. I should also not forget to mention the fact that we are more than happy to continue our engagements to support the business partners to the anchor players by way of value chain banking, where we know that once we support the anchor players, then all their supporting partners, the likes of the distributors, the suppliers of materials, and the contractors are also supported from that closed-in loop, which we can gladly offer in view of the relationship that we do have with the anchor players. Certainly, our continued support through digitalization to support payments and improve efficiency of transactional services is one of our focal points as well. Thank you very much.
Thank you very much, all of you gentlemen. We could now be able to say, I've not been from the participants, I'm not seeing questions coming in from the participants, but I think I could make one or two comments as we wait to see in the last 30 minutes that we still have, if there are some people who can send some questions on the chat, and then I'll direct them to the most appropriate people to answer those questions. But I noted in the PS speech several aspects, but among them was specifically the concern that at this point in time, you cannot undertake what you call the FATs. FATs are factory acceptance tests that are carried out prior to the shipment of the equipment that is going to be used in the infrastructure projects like Karuma. That is a fundamental observation or impact. Right now, how are you resolving this particular issue? Because does it mean that you are going to waive the quality concerns related to the equipment that is going to be imported? That is fundamental for people to know. But also, you also mentioned that there are special clauses in these contracts that have are hinged on the force majeure events, right? I think that's a fundamental observation. How are you dealing with the issues related to force majeure events, especially with issues to do with Karuma now, which is almost at its tail end of commissioning? But also, I have seen that while you are still grappling, particularly in light of the COVID, in the gross, what you call it, significant drop in demand, you are also expecting a big animal called Karuma, 600 megawatts. So you are looking at, right now, about 720 megawatts of utilization, leaving about 500 megawatts of free capacity. And then you come back and you add on 600 sometime at the end of the year. And then you have almost, what is that? That is 1,100. A significant amount of non-performing assets, I would call them, in the mix. How are you dealing with this as a country? Because that is itself has, are there some arrangements to negotiate with the financiers? Because I know that this money, the cost of doing these things has not gone away, and the obligations are there. But how are we really as a country dealing with these issues? Because this, I know that the regulator is not in this, was not able to join us in this particular forum, but I think for you as PS, you're closer to that process than any of the other three panelists. Could you throw any light in that regard?
Engineer Semitala, yes. FATs, factor acceptance tests, are very critical because if you were to waive the requirement, then you are likely to impact the infrastructure over a very long time, because contractually, the contractors are supposed to ensure that what they deliver to you is acceptable. And therefore, we are accepting that the companies can work with the equipment that they have in country for now, with the hope that these lockdowns can be relaxed and we're able to undertake these tests. In as far as force majeure clauses are concerned, yes, a number of companies have invoked these clauses, or at least have notified us with the intent to invoke. What this implies is that the timelines will now be affected, because in writing to us, they also follow that up and say, yeah, now I was supposed to commission this plant at such and such a time, but the likely impact is going to be extension of the timeline. And of course, many of those we have to understand that it's a fact that is with us. We are not the only ones who are impacted, and therefore we are working around that. The challenge of the added generation that is coming, and yet the demand centers are not coming up as quickly as we should see, is a reality that we are faced with. We are beginning to see it even before COVID, and that's why as a country we set out very quickly develop these high demand centers. As you may have seen from one of the slides of Celestino, the large industries consume over 50% of the power, and yet they are fewer, if you see what I mean. They are fewer in number, but the consumption is over 50%. So we saw that is an opportunity for us to sell this power by developing industrial parks that, once populated by industries, this consumption will actually not be there. There are industries that are already wanting to come in that can consume up 300 megawatts, one industry. So once those are realized and are in place, we think that the Karumas of this world will be very quickly consumed. And therefore, with that in mind, we're not just looking back and saying, oh, you know, we have seemingly excess capacity now, therefore we can't generate plants anymore. We are moving on with planning other plants. We're planning Oriang, which is about 400 megawatts. Equally, Chiba is about 420 thereabout megawatts, and Ayago, which is 840 megawatts. The period for between feasibility study to commissioning of these plants is upwards of 5 years. So these ones we are continuing, and we'll see what happens. I think that addresses your 3 questions, Engineer Senator.
Thank you very much. I have that's a good attempt to answer them, but of course there could be some other areas that could be effectively dealt with even afterwards. I suspect that the bank may want to create a link in which all these issues have you know, questions are coming up. I can see now. Later on, I suspect that the administration at the bank may want to follow up on these questions, because I think because of time we may not be able to have all of them answered. But I have one of our colleagues also in the sector here. I could even mention his name, Blessing Shaho, has a question here. He's saying the Minister of Finance in his budget speech indicated that the national budget will be revised as a result of the impact of COVID-19. What is the plan for the revised budget for electricity, considering that there have been shortfalls in electricity demand due to the lockdown and SOPs as compared to the tariff projections, meaning that the sector will not recover its cost through the tariff? Are there going to be subsidies introduced in the revised budget to cater for the shortfall in sector revenue requirements so that generation, transmission, and distribution will be able to operate effectively? In other words, what is important from this perspective, Blessing, thank you for that question, is that the total revenue requirement in order to produce this electricity has not gone away. Certainly and the tariff, as we understand it, is imputed from basically the total revenue requirement. I'm just trying to say this for the benefit of others, over the energy sold. Okay, and the energy sold is simply the energy generated minus the energy lost. That's the equation. So fundamentally, something must give way, and that's the question that Blessing is asking. Is this review of the budget going to be able to deal with these challenges that we have just mentioned, considering that as a sector, the cost requirements are not likely to be recovered from the tariff? I think this is, again, PS, sorry about that, you are closer to this than any of these other colleagues in the panel.
Yeah, I cannot preempt what will be discussed. The meeting to discuss this review of the budget is next week.
Yes.
But clearly, all sectors have been invited to look at the budget of 2020-2021. And some of these are the considerations that we're going to be putting on the table as far as our sector is concerned.
Somebody has asked something here. Is Vicent or team is saying most of the payments made to the generators of the power system seem to be repatriated out of the country. Are there plans to retain a portion of the payments in country to stimulate growth and reinvestment within the country? I think this is an issue of capital flight. I know that most of the PPAs, I think, if the last time I checked, are largely in USDs, right? Is that correct, PS? I think so.
I need to check.
Yes, I think that's the case. But and these investors, so-called IPPs, are all largely foreign. I think that's the question that is being asked. But maybe this particular question may not be, if you are not in position to answer it, it may feed into your discussion that you are talking about next week.
No, but I
think
I may contribute to it a little.
Yes.
We have the Local Content Act. Okay. One of the things that we're beginning to emphasize, and we have always emphasized, especially in the oil and gas sector, is that we don't look at the tail end of the revenues coming in, or these payments that Vincent or team is talking about. If Ugandans can be involved in some of these contracts, subcontracting, supply of equipment, supply, you heard His Excellency the President talking about supply of generators, that is a way of some of these revenues coming in the country. You may not avoid, for instance, paying back China Exim, because China Exim has funded Karuma and Isimba. It's a contractual obligation. We have to pay back those dollars. But there are soft areas, low-hanging fruits where Ugandans can participate and ensure that some of these dollars remain in country.
Okay. Somebody else was trying to add something there. Was it? Who was that?
Yeah, Engineer Celestino here. What I was saying is, I think this is the dilemma. When the capital is coming in to build this infrastructure, it's very okay for the country. We need to look at it the other way around. When it comes back to over the period, recovering this cost and paying back the capital, we shouldn't demonize the capital going back to where it came from. We should look at the impact of what that capital created, because there's this tendency when it's coming in, it's okay. When it comes to amortizing the repayment, it's not okay. And the other way we can look at sharing this is, for example, like what Umeme did, go on the stock market, 5,000 shareholders, and then some of the capital benefits remain within the country. So we shouldn't demonize capital in when it's time for capital going out.
I think that was a very timely submission. I think that's well said, Celestino. Another question is from Farah Nakoda. I think
maybe no, but just a quick one.
Yes, please.
I think going forward, I just wanted to contribute something in that respect. It's a good point that Mr. Otim has raised, and maybe it should give us as a nation another opportunity to rethink on the way we do business as a country when it comes to the infrastructure projects that are required in the power sector. Why am I saying this? Celestino has mentioned it very well. I think we do have the obligations right now to pay back the dollars, because at the onset, the dollars were the ones that were used. There are two other other options that can be followed. Either we provide solutions as financial institutions, we provide solutions to government to swap these obligations, these dollar obligations, into the local currency. Now, that's another long story, but I don't want to go into that. The other one we could also consider going forward, and maybe our PS Robert could also look into this in the coming meetings that they do have, that for the projects they have like Oriam and Ayago, the 400 and 840 megawatt projects that they do have, well, it's clear that for these infrastructure projects, as I mentioned earlier, the amounts of money that are required are so huge. So mobilizing resources in the local currency can be a difficult or challenging kind of initiative. What I would propose on behalf of the bank is that probably we can reduce our future dollar exposures or obligations by creating investment vehicles for mobilization of resources in the local currency. Say, for instance, a bond could be issued for a specific project, and that bond can be local currency covered, so that subsequently, eventually, we can reduce the impact of on the local currency that emanates from the need to repay these facilities in dollars or in any other foreign exchange. That's what I wanted to submit.
Maybe,
okay, thank you very much, Roy. Yes, please.
Just quickly to address what Martin has said. What we have considered now lately is that we are structuring these developments differently. While Karuma and its public project, the Ayagos and Oriang, we are structuring them as a BOT, build, own, operate, and transfer. The dollars that are the dollars that are coming in are not public dollars. The investments are structured by the developers in such a way that they are looking at a return on investment, of course, which is regulated by the regulator to ensure that the tariff is within acceptable limits.
Okay, thank you for that very important clarification. There is another gentleman called Edward Nangano. Guest, we produce excess electricity, but population access to power is south. I don't know what that means. South of 40%. The focus seems to be on growing industrial consumers. Now, with the effects of COVID to the population, I don't know what he means. Do you industrial players have a plan to play? Oh, yes, I think he's saying, do you industrial players?
Read the question. I think I've understood the question.
Okay, very good. Support population light up, yes.
He's asking why are we focusing on industrial consumers? But I thought I was clear why I focused on industrial consumers. I was looking at
demand.
How do we create demand for these generation plants that we are producing? Yes, because as we saw, I think there was a slide from Umeme that these industrial consumers take the bulk of the power. There are interventions, of course, that we are working on to ensure that the population is connected. We have the new connections policy that is looking at connecting 300,000 customers every year, and through Rural Electrification Agency and the other downstream distributors, this is working quite well. We are now focusing on electrifying all the sub-counties. We have done all the districts, save for Kotido and Kabong, which we will see their connection later this year. And then Buvuma, which we are working on a facility that will have a cable under the lake to take power to Buvuma. Then all districts will be connected. So we haven't forgotten the population. I was just focusing on how much demand goes to industries versus domestic consumers.
Thank you very much, Robert, for that. Somebody in the names of Annette Chichoncho has directed this question to Celestino, and it says to Mr. Celestino, we acknowledge the need to power the country. You mentioned need to power TVs for learning. What plan do you have considering the standard of living in rural areas especially, and the fact that the population may not afford this power?
Yeah, I think, thank you for the great question. Based on the UBOS statistics, you will see that actual access to electricity in the country is in excess of 51%. In that, if grid is at 25%, off-grid, meaning rooftops, solar, and others, are 26%. So, and we know the grid takes a bit of time to grow. So as in the strategy to electrify the country, a combination of solutions are coming through, both on-grid, expanding the grid as the PS has indicated, but also accelerating the off-grid solutions in those areas that are far off the grid through putting out rooftop solar, mini grids, and other sources of energy. The other fundamental question I've raised is about affordability, and that's why the government came in with what they call, as indicated by PS, the electricity connections policy, whereby the connection to your house is actually subsidized and paid for by government. All you pay is the 20,000. Then further still, the first 15 units you consume are highly subsidized. They are being sold at 250 shillings, which is actually below the average generation cost of power. We believe through all these subsidies, people can access the basics of energy to meet their demands. But overall, as indicated by the PS, the strategy for the country is to improve the economics of people. And this can be achieved through industrialization, promoting SMEs that create a lot of jobs, and the general economic development of the country. That will ensure that actually money filters through to people's pockets and it improves their livelihood. What actually we have seen and research has been done that shows that you will put up the line, initially people say, oh, it's not affordable. But in that area where you put electricity, you see economic activity picking up, entertainment picking up, agro-processing picking up, and ultimately the community actually improved. And I've seen drastic areas that have transformed because of being electrified. So let's deliver the electricity that will transform their life and improve their economics in their homes.
Thank you very much, Celestino. I think I will now take one last one from Farhan Nakoda. I think it is, well, it might have been said a little bit, but just for completion, what are government's commitments to pay? I think that's a fundamental one, particularly having known that we have now commissioned December, and then we have now shortly commissioned, we are shortly commissioning Karuma. But what are government's commitments to pay for idle generation capacity at Isimba? I think that's the question. Possibly, again, PS, you are closer to this than anybody else. I would like you to give a shot at that one.
I wouldn't call it idle, because this power is all sold to UETCL, and UTCL has a way it distributes the power, transmits the power to the various demand centers. But maybe the question could have been looked at: Are we able to meet our payment obligations on the loan that we acquired from China? I think that should be the question. And the Ministry of Finance is at the center of that, and I'm sure that obligation is being met.
Okay. Thank you very much, colleagues. I think in the interest of time, I would like to hand over to the organizers to give, I think, closing remarks, but I want to take this opportunity to thank the panelists for the very informative presentations. But as you know, all good things must come to an end. And I want to hand over to the bank. Thank you very much for their closing remarks.
Thank you very much, Engineer Norbert. We have been informed quite well. And for our panelists, the PS, thank you very much, Robert, for a job well done. Many questions have remained, but we shall find a way of ensuring that our clients and you get the interaction we ought to have got. Paul, thank you very much for that presentation as well. Celestino, we do appreciate, and my colleague Mate, thank you very much. I think it's been very interactive, and the fact that a lot of discussions are happening both at the macro level and the customer level on how we can be part of the value chain to ensure that we build the power economy in this country. I want to appreciate colleagues that have put in all the technical knowledge in bringing all this together. We do appreciate. This is just the beginning. There are many more of such to come, considering that it's the new norm. It's a good way of utilizing our time to ensure that we are able to serve our clients and our customers to the best as possible. Thank you very much for the time again, and wish you the best of weekend. Thank you.
Bye-bye.
Thank you. Thank you.
Thank you very much.
Okay, thank you very much. Bye-bye.
Now, if we fall in,